What if I told you the greatest danger in trading isn't losing money, it's believing you've figured it out? That moment, when a few trades go your way and your chest lifts, your screen glows with green, and you whisper, "I've cracked it," that's when it starts. The illusion. You begin chasing certainty, perfect indicators, flawless entry points, magic strategies that work in every market. And just when you're sure you've got the game beat, the market humbles you, violently. Why? Because the lie every trader believes is this, that the market is something you can control. But what if I told you? The market doesn't need to be controlled. It needs to be understood, or better yet, mirrored. Because when Jack Schwager interviewed the world's top traders, those who turned thousands into millions, survived crashes, and came out stronger, he discovered something terrifying. They weren't smarter than you. They weren't luckier than you. And they didn't find a secret system you can buy for $97 online. They were just better at one thing: mastering the inner war. This is not a book about charts. This is not a script about setups. This is a hypnotic journey into the minds of the market wizards and what they all knew that nobody else talks about. So here's your first rule. The market doesn't test your system. It tests your soul. And over the next few minutes, you're going to see how 15 Wizards' laws will rewire the way you think, trade, and possibly live. But first, you have to unlearn everything you think you know. Wizards' Law number 1, the myth of the perfect system. Let me tell you a story. A young trader, hungry, obsessed, spent 2 years perfecting his trading system. Backtests looked flawless. It had rules for every condition: entries, exits, stops, risk reward, even the lunar cycle, because why not? On paper, he was untouchable. Then he went live. Within weeks, he wiped out 30% of his capital, not because the system failed, but because he did. He hesitated when he should have entered. He exited early when a candle scared him. He second-guessed every rule he wrote. The system was fine. He wasn't. Here's what every beginner believes: if I just find the right system, I'll win. But here's what every market wizard knows. There is no perfect system, only a system that fits you. Jack Schwager's interviews were filled with contradictions. One trader swore by fundamentals, another purely technical. One only traded long-term trends, another scalped for seconds at a time. One used astrology, one laughed at astrology and traded momentum. They couldn't agree on method, because method doesn't matter until your mindset is ready. Paul Tudor Jones once said, "I always believe that prices move first and fundamentals come second." Meanwhile, Jim Rogers claimed, "I wait until there's money lying in the corner, and all I have to do is go over there and pick it up." Same game, different strategies, both billionaires. So what's going on? Schwager realized the unspoken truth. Traders don't win because they find a universal system. They win because they create a deeply personal one. A system that fits your emotional tolerance, risk appetite, cognitive processing, lifestyle, psychological wiring. What worked for Marty Schwartz, aggressively day trading with massive size, would shatter someone built for slow, long-term swing positions. In fact, the pursuit of a universal system is the market's most dangerous mirage. Why? Because it keeps you looking outside, when trading is won inside. Here's the hypnotic trap. The more you chase external systems, the further you drift from internal alignment. And that misalignment, it leaks. In hesitation, in FOMO, in revenge trades, in abandoning a strategy after one red day. Because no system, no matter how good, can protect you from the trader who doesn't believe in it. So what's the way forward? Build a system around you. Start with your pain tolerance, your daily rhythm, your emotional triggers, your speed of decision-making, your need for control versus flow, and then test ruthlessly. Not to find perfection, but to find trust. The market will never reward you for being someone else, but it just might for becoming the most emotionally honest version of yourself. Remember, a system doesn't make you a wizard, but a wizard makes the system work. Wizard's Law number 2, confidence without arrogance. Imagine a man staring at a blinking screen. He's already made millions. He's known on Wall Street, yet before every trade, he still whispers the same words to himself: "I could be wrong." That man is Paul Tudor Jones, one of the most successful traders alive, and one of the most humble. Because here's what most traders get backward. They think success brings certainty. But in the world of wizards, the more they win, the more they respect the unknown. Confidence isn't about being right, it's about staying ready. Arrogance says, this setup can't fail. Confidence says, this setup is strong, but I have a stop loss. Arrogance bets the house. Confidence bets what it can afford to lose. Arrogance needs to be right. Confidence needs to be aligned. In Schwager's interviews, arrogance was often the ghost that haunted the downfall stories. Many wizards admitted their biggest losses came after a streak of big wins. Why? Because the ego expanded faster than their emotional container could hold. They became gods in their own minds, until the market, cold, indifferent, reminded them they were still human. So how do real wizards cultivate confidence without falling into ego? They build conviction with boundaries. Here's what that looks like. They always assume they could be wrong, not out of fear, but out of respect for uncertainty. They stay nimble, adapt, reverse, cut, flip. They marry the process, not the prediction. They build systems that forgive human error. No revenge trades, no double downs to prove a point. They cultivate inner detachment. I am not this trade, I am not this outcome. And most importantly, they review every trade, even the winners, with brutal honesty. Because a profitable trade done wrong is still a failure. In one interview, Schwager asked, "What do you consider the most important trait for a trader?" The answer wasn't intelligence, wasn't strategy, it was emotional resilience. Confidence at this level isn't loud, it's quiet. It's the silence before the trade, the pause after a win, the journal entry on a Sunday night, the way they celebrate process, not profits. So here's your reflection. Do you trust your method or just your last win? Can you walk away after 5 losses and not lose your identity? Can you stay grounded when everything goes your way? Because market wizards don't strut. They observe, they plan, they wait. And when it's time to strike, they do. Not with noise, but with stillness. Real confidence isn't about being right, it's about being ready to be wrong and still play the game well. Wizard's Law number 3, losing is part of winning. Every trader remembers their first real loss, not a small dip, not a stop out, but the kind of loss that makes your hands shake, that whispers in your ear, maybe you're not cut out for this. Now picture Marty Schwartz, a former Marine turned technical trader. During his early years, he lost a lot. He blew out multiple accounts. He doubted himself. He even walked away from trading, convinced it wasn't for him. But he came back, and this time, he did something different. He made peace with losing. And from that point on, he didn't just become good, he became one of the best traders ever interviewed by Schwager. Here's what most people miss. Losing isn't the opposite of winning. It's the tuition you pay to learn how. Amateurs take losses personally. They say, I'm a failure. Wizards see losses as feedback. They say, interesting, what is this teaching me? Because every loss contains a mirror. It reflects your impulsiveness, your overconfidence, your lack of preparation, your emotional blind spots. If you ignore it, it repeats. If you study it, it transforms. In Market Wizards, some of the greatest insights came not from the victories, but from the breakdowns. Bruce Kovner almost lost everything on a soybean trade. Michael Marcus turned 30K into 80K, then back to 20K, twice. Tom Baldwin once took a loss so big he walked outside and screamed. But none of them quit. They learned how to lose. More importantly, they learned how not to let it break their system or themselves. So here's the shift. Instead of asking, how can I avoid losing? Start asking, how can I survive it? Because once you realize losses are part of the terrain, not a personal curse, everything changes. You stop fearing the red. You start managing the damage. You begin to build resilience instead of perfection. Every trader who's ever made millions has also lost tens of thousands, sometimes in a single day. What makes them wizards isn't that they avoid pain, it's that they extract wisdom from it. In fact, Schwager noted something profound. Most market wizards could tell you the exact moment when their trading transformed, and it was always after a painful loss. Because pain, when studied, becomes pattern recognition, and pattern recognition becomes instinct. And instinct, that's what turns traders into titans. So next time you take a hit, don't flinch, don't hide, don't spiral. Instead, lean in. Ask, what did I ignore? What rule did I break? What emotion hijacked me? And most importantly, what belief must die so I can grow? Because here's the truth, every loss is a teacher, and every wizard is a student until the end. Wizard's Law number 4, the edge is emotional. Picture 2 traders. They both have the same strategy, same entry signals, same risk management, same targets. One makes consistent returns. The other bleeds money every month. So what's the difference? Not the system, not the market, not luck. It's how they feel the moment the trade goes live. Because here's the secret most ignore. The real edge isn't in your strategy, it's in your state. Every trade triggers a wave of emotion. Anticipation, doubt, impulse, greed, hope, regret. And how you navigate that wave determines whether you follow your plan or abandon it the second it feels uncomfortable. In Market Wizards, Ed Seykota, one of the most legendary trend followers ever, said something unforgettable. The elements of good trading are 1. Cutting losses, 2. Cutting losses, and 3. Cutting losses. If you can follow these 3 rules, you may have a chance. Simple? Yes, but try doing that when your heart's pounding, your palms are sweating, and you just watched your P&L drop 5 figures in 60 seconds. That's the test. That's the real arena. Because no matter how perfect your strategy looks in a back test, it means nothing if your emotions over real time. Here's what market wizards do differently. 1. They expect the emotional storm. They don't pretend to be emotionless. They just learn to feel without reacting. 2. They train detachment. They don't need the next trade to win. They trust that following the plan over time wins the game. They use journaling like therapy, not just for performance, but for self-awareness. They write down, what emotion was present before the trade? What changed during the drawdown? What narrative did my brain start telling me? Because trading isn't just math, it's narrative. And the most dangerous narrative is, this trade must work. That's not logic. That's ego dressed up as certainty. So how do you shift? Start building emotional feedback loops. Feel, pause, label, breathe, act. Instead of letting fear or greed hijack your fingers, give your awareness a chance to intervene. The best traders, they don't suppress emotion. They observe it. Because the moment you can name what you're feeling, you reclaim your power from it. Your trading journal becomes a mirror. Each entry, a breadcrumb trail to your unconscious patterns. Each review, a chance to rewire your triggers. And over time, you panic less, you hesitate less, you trust more, you flow. Jack Schwager often noted that the most consistent traders didn't sound like traders. They sounded like monks, calm, measured, emotionally honest, focused on process. They weren't chasing highs, they were managing states. Because once you understand this law, everything shifts. The market is not your enemy. Your unprocessed emotions are. And once you master them, that's when you stop gambling and start evolving. Wizard's Law number 5, adaptability over rigidity. There's a rule in nature. The species that survives isn't the strongest. It's the one most adaptable to change. The same rule applies to trading. Because markets change, trends reverse, volatility vanishes, patterns break, news shocks ripple through price like a lightning bolt through calm water. And the trader who clings to one method, one time frame, one sacred setup, gets left behind. In Market Wizards, Schwager interviewed traders who had completely transformed their style over time. Not because their old strategies stopped working, but because the market evolved, and they evolved with it. Richard Dennis, the father of trend following, built fortunes riding long-term trends. But after a while, those massive directional moves faded. The market shifted, liquidity changed, technology compressed time. Those who adapted thrived. Those who clung to what used to work faded into irrelevance. So let's be clear, the market owes you nothing, not consistency, not logic, not fairness. And it especially doesn't owe you an opportunity that fits your favorite setup. Which means your job is not to force the market to conform to you. Your job is to develop range. Wizards know this. That's why they observe the environment before placing a trade. They ask, is this a trending day or a choppy one? They reduce position size when volatility spikes. They sit out entirely if nothing aligns. They switch markets, styles, or even timeframes when it makes sense. Because adaptability isn't chaos, it's calibrated flexibility. In fact, one of the most underrated superpowers in trading is the ability to say, today my strategy doesn't apply, so I do nothing. That's discipline disguised as detachment. It's easy to feel like you always need to be doing something, clicking, entering, watching. But wizards know, sometimes the most profitable move is stillness. Here's a metaphor for you. A rigid tree breaks in the storm. A flexible reed bends and survives. So how do you become more adaptable? 1. Zoom out. Ask, what is the market telling me today? Not, how do I force my setup into this mess? 2. Track conditions, volatility, volume, news catalysts, structure. Adapt risk and strategy accordingly. 3. Develop multiple gears. Have a trending playbook. Have a range playbook. Have a do-nothing playbook. 4. Detach from identity. You are not a breakout trader. You are not a scalper. You are a student of flow. Your identity is fluid. Adaptability also means emotional agility. When your trade idea fails, can you reverse it without shame? When you're wrong 3 times in a row, can you stop and reassess instead of doubling down to prove a point? Because adaptability is not just technical, it's psychological. It's being flexible in your beliefs, open in your expectations, detached in your reactions. Schwager saw this pattern across every trader he interviewed. They were obsessed with truth, not being right. They adjusted faster than the market could punish them. That's not luck, that's wisdom. So next time you catch yourself saying, this shouldn't be happening, this setup always works, I'll just wait for it to come back. Stop, breathe, adapt, because rigidity feeds the ego, but adaptability builds the wizard. Wizard's law number 6, discipline beats genius. He had a photographic memory, a degree from an Ivy League. He could memorize entire balance sheets, spot inefficiencies in seconds, and out-analyze anyone in the room, but he couldn't follow a stop-loss. And that's why he lost everything. You see, trading doesn't reward the smartest person. It rewards the most obedient one. And in Market Wizards, time and time again, Jack Schwager saw it. The traders who performed the best weren't necessarily the most brilliant. They were the ones who could execute their plan without negotiation. Discipline isn't sexy. It's not what sells trading courses or builds Twitter clout, but it's what builds consistency. And consistency compounds. Let's break it down. Genius will overthink, try to outsmart randomness, argue with the market. Discipline will cut the loss, let the profit run, follow the rule, even when it hurts. The market doesn't care about your intelligence. It's not testing your IQ. It's testing your ability to follow through when your emotions are on fire. Take Tom Baldwin, one of the biggest bond traders in the world. He wasn't a math genius, but he had incredible self-control. He sized up when the odds were in his favor. He sat out when the market was noise. He knew his limits and respected them. That's discipline. Or consider Marty Schwartz again. He called himself a champion loser. Why? Because he became elite only when he finally committed to cutting losses without flinching. The moment he did that, everything changed. So why is discipline so hard? Because it requires you to override your biology, your fight or flight response, your greed, your fear of being wrong, your addiction to being active. Trading rewards boredom, but most people are addicted to stimulation, so they break rules to feel alive, to chase, to revenge, to win it back. But market wizards, they engineer boredom into their brilliance. Their rules are sacred, their checklists are religion, their discipline is non-negotiable. They don't ask, do I feel like exiting here? They ask, what does the plan say? It's not blind obedience, it's strategic surrender. Because here's the paradox. The more you trust your plan, the less you need to trust your emotions. And that's freedom. Want to feel powerful in trading? Don't try to control the market, control yourself. Here's how to build that discipline muscle. 1. Automate decisions. Pre-plan your entries, exits, and position sizes, so when the moment comes, you just click. 2. Use checklists, every time. Pilots do, surgeons do, wizards do. 3. Gamify the behavior, not the outcome. Reward yourself not for green trades, but for following your system exactly. 4. Journal your breakdowns, not to punish yourself, but to spot the emotional triggers that override logic. 5. Create accountability. Share your plan with someone. Record yourself trading. Build constraints. Because left to our own devices, we become emotional creatures. But with constraints, we become consistent traders. Schwager didn't say discipline was glamorous. He said it was necessary. And every trader he interviewed, every wizard, had rituals, rules, routines, even the intuitive ones, especially the intuitive ones. Because intuition without structure is just impulse in disguise. So remember, genius might get you a great trade, but discipline builds a great career. Wizard's law number 7, fear and greed are tools. Most traders are taught one thing from day one: conquer your emotions. Fear and greed are the enemies. But market wizards see it differently. They don't kill their emotions, they listen to them. Because here's the truth Schwager uncovered. Fear and greed aren't enemies to be destroyed, they're signals to be decoded. Let's start with fear. Fear arises when you size too big, you don't trust your system, you're entering impulsively, you're risking more than you can emotionally afford. But fear also shows up right before breakthrough. That feeling in your gut, it might be warning you, or it might be testing your resolve. So wizards don't ignore fear. They ask, is this fear pointing to danger or to growth? They've trained themselves to distinguish between gut instinct and emotional sabotage. They pause, they breathe, they examine, not react. Now flip the coin. Greed is trickier. Because greed often disguises itself as confident. This trade looks amazing, I'll double my size. One more win and I'll hit my target, then stop. It's running, let's ride it without a plan. That's not confidence, that's dopamine. Market wizards see greed as the spark before the fire, and they've learned this law. If you feel euphoric in a trade, get ready to lose. Ed Seykota said, win or lose, everybody gets what they want out of the market. Some people seem to like to lose, so they win by losing money. Let that sink in. We subconsciously recreate emotional states through trading. Chaos, punishment, validation, excitement, drama, because it's familiar. Unless you bring awareness to the table, your trading becomes a mirror of unresolved patterns. That's why Schwager's top traders all emphasized emotional neutrality. Not indifference, but grounded presence. They learned to use emotion as a compass, not a driver. So what does that look like? 1. Fear says, slow down. Recheck your plan. Review your size. Ask, am I acting from process or panic? 2. Greed says, zoom out. Take a breath. Step away. Ask, am I following my edge or chasing a feeling? 3. Journal the spike. Every time emotion spikes, record it. Not just what you felt, but what action it triggered. Over time, patterns emerge. 4. Practice emotional rehearsal. Visualize drawdowns, visualize slippage, visualize winners turning into losers. So when it happens, you're ready. Because here's the punchline. You don't master trading by eliminating emotion. You master it by building a relationship with it. You stop being afraid of fear. You stop worshiping greed. You just notice. That's the path of the wizard. They don't trade to feel powerful. They trade to feel aware. They don't react, they respond. Because in the end, emotions aren't the problem. Unconscious reactions to them are. Learn to feel without flinching. That's your edge. Wizard's Law number 8. Your worst enemy is you. You've studied the charts, you've read the books, you've mastered the strategy. So why do you still blow up your account? Why do you still chase after a loss? Enter early, exit too soon, move your stop just once, and then watch in horror as the market punishes you. Again? The answer is brutal. Because you are the variable your system can't control. In Market Wizards, one trader admitted, every time I lost big, it wasn't the market, it was me breaking my own rule. Another said, I'd watch myself sabotage a good setup and feel powerless to stop it. Let's name it. Overtrading, revenge trading, fear of missing out, paralysis in drawdown, breaking rules when the stakes get high. These aren't strategy flaws, they're self-regulation failures. You see, trading isn't about beating the market. It's about not letting the market trigger your deepest psychological patterns. Because here's the hidden truth Schwager revealed. The market is a mirror, and it reflects your most unconscious beliefs back at you. With leverage, you think you're battling price, but you're actually battling your fear of loss, your hunger for validation, your addiction to control, your need to be right, your unresolved childhood scarcity wounds. Sound dramatic? Ask anyone who's traded real money long enough. They'll tell you the demons show up fast, and they wear your face. One trader, after journaling for months, realized that every time he sized up and lost big, he was unconsciously recreating a sense of failure he grew up with. Trading had become his stage for reenacting trauma. Most don't realize this. They just keep cycling. Trade, emotional trigger, rule break, regret, vow to do better, repeat. So how do wizards break the loop? 1. Radical self-honesty. They stop pretending. They admit, I am the problem, and that's good news, because I can change. 2. Relentless journaling. They track every impulse, every breach, every emotional spike. Patterns emerge. Awareness grows. Triggers lose their grip. 3. Rule hardening. They make rules that protect them from themselves. For example, no more than X trades a day, walk away after 2 losses, no live trades unless checklist is complete. Discipline is not control, it's compassion with boundaries. 4. Self-compassion. They don't beat themselves up after mistakes. They study them, and they forgive so they can evolve. Because shame breeds secrecy, and secrecy sabotages progress. Jack Schwager noted this repeatedly. The best traders had almost therapeutic levels of self-awareness. They treated every blown trade as data, not failure, not drama, just information. Here's your reflection. What pattern keeps repeating in your trading? What emotion hijacks you the most? What part of you wants to fail so you don't have to keep risking? That's the work. That's the hidden level. Because your biggest enemy isn't the market. It's the unobserved version of you, sitting at the screen, mouse in hand, ready to click just one more time against your better judgment. But here's the gift. If you are the problem, you are also the solution. Master yourself, and the market becomes quiet. Wizard's Law number 9. Trade small to learn big. Let's be honest. You want to size up. You want to scale fast, flip 5 figures, go full-time, maybe even quit that soul-sucking job by the end of the year. You've done the math. If I just make 5% a week with X capital, I'll be rich in 18 months. But here's what the market will teach you. If you're not careful, it doesn't care about your math. It cares about your emotional bandwidth. And most traders are trading position sizes their nervous systems can't handle. That's why they panic. That's why they hesitate. That's why they exit too early, cut winners short, or freeze mid-trade. It's not a knowledge gap. It's a capacity mismatch. Schwager saw this in nearly every wizard he interviewed. They didn't become profitable by going big. They became masters by going small, until their discipline could handle more. Michael Marcus, one of the most explosive traders of his era, once said, "If I hadn't been trading so small, I wouldn't have had the freedom to learn." Read that again. Small size equals freedom to think clearly. Small size gives permission to lose without panic. Small size gives room to learn without trauma. Because trauma in trading doesn't just come from being wrong. It comes from being wrong with too much on the line. Here's the paradox. The smaller you trade, the faster you grow. Why? Because when you're emotionally neutral, you actually follow your rules. You can think clearly. You're not hijacked by adrenaline. You can observe instead of react. It's like going to the gym. You don't deadlift 400 pounds your first week. You build the movement pattern. You train form. You add weight only when the nervous system says ready. Trading is the same. So here's how wizards size themselves into success. 1. They size based on comfort, not greed. If your heart races, you're trading too big. If you obsess over the outcome, you're trading too big. 2. They scale up only after consistency, not after a hot streak, not after a gut feeling, only after cold-blooded, journal-confirmed, review-backed proof. 3. They focus on execution metrics, not dollar gains. How well did I follow my process? How well did I control my state? That's mastery. 4. They accept boredom. Small trades aren't thrilling, but they are training, and training builds identity. Eventually, size grows, but it grows after your emotional maturity does, not before. So if you're early in your journey, don't ask, how much can I make? Ask, how well can I execute when the stakes are low? That's the real compounding. Because once you can trade a small account with absolute precision, without shortcutting rules, without emotional swings, without revenge trades, then and only then, you're ready to scale. Not because you're chasing speed, but because you're building something sustainable. Remember, there's no shame in trading small. The only shame is blowing up before you learn who you are. Wizard's Law number 10, process over outcome. You take a trade, you followed your rules, you waited for the setup, you sized appropriately, you executed cleanly, and it lost. Now what? Do you beat yourself up? Do you tweak the system? Do you chase the next trade just to get back to even? If so, you've fallen into the trap every amateur falls into, confusing outcome with process. Let's flip the scenario. You broke your rules. You sized too big. You entered late, chased the candle, no stop loss, and it won. Now you feel validated, even proud. That's even more dangerous. Born from chaos, just reinforced emotional recklessness. In both cases, you're measuring success by results instead of execution. But wizards, they think like casinos. And casinos don't care who wins at the roulette table tonight. They care that the edge was in play over thousands of spins. That's process thinking. And it's rare because it requires you to do something incredibly hard, Detach your identity from the outcome. In Market Wizards, Schwager found that every elite trader had a profound respect for this principle. They knew losses are inevitable, outcomes are random in the short term, but over time, process compounds into profit. Here's how they do it. 1. They define success as did I follow my plan, not did I win money today. They measure precision, not profit. They review losers that were well executed with pride, because to them, a clean, rule-based loss is a victory in disguise. It's evidence they're building the right habits. 3. They don't personalize bad trades. A bad trade isn't a bad trader. It's a statistical occurrence, just like flipping a coin and getting tails. No emotion, no story, just numbers. 4. They have checklists and logs, so they know with surgical precision why something worked or didn't. They don't feel their way through progress. They track it, and perhaps most importantly, 5. They don't let results seduce them into system hopping. They understand the deadly spiral. One loss, doubt system, try new one, early success, crash, rinse and repeat. But if you stay with process, you get something more powerful than a hot streak. You get data, and data over time turns into conviction. So here's your shift. Don't ask, did I make money? Ask, did I trade with integrity? Because long-term profitability is just short-term integrity, done consistently. The market is chaos, but your process, that's your anchor. It's the only thing you control. And when you let go of the outcome, paradoxically, better outcomes arrive. Outcome obsession creates fear. Process obsession creates freedom. And freedom, that's what wizards really trade for. Wizards Law number 11, intuition is earned, not gifted. There's a myth in trading that some people are just naturals. They feel the market. They know when something's about to move. They see patterns where others see noise. But here's the truth, Schwager uncovered. Intuition isn't magic. It's memory in disguise. Every trader who just knew a breakout was real, had spent years watching breakouts fail. Every trader who could sense a rug pull had been rug pulled enough times to recognize the smell of it. Intuition isn't a shortcut. It's a signal your subconscious has detected a familiar pattern faster than your conscious mind can explain. And that pattern recognition, it comes from repetition, review, exposure, pain, reflection. Let's take Bruce Kovner, a piano player turned trader, not a finance prodigy, not a quant, but he became one of the greatest macro traders alive. Why? Because he lived inside the market. He journaled obsessively. He reviewed every trade. He noticed his own reactions as much as he noticed price action. Over time, his mind built an internal map of behavior. So what looked like intuition to outsiders was actually deep pattern fluency. Same with Michael Marcus. He'd take small losses over and over again. He'd get familiar with every shape of pain, until one day he began to anticipate them before they arrived. That's earned intuition. It's not loud, it's not sexy. It's a whisper, a pause, a tension in your gut, a flicker of memory, and it only shows up after you've paid the cost of attention. So how do you earn it? 1. Build a visual library. Study thousands of charts, not just winners, but failures. Train your eyes to see setups emerge, evolve, and collapse. 2. Journal reactions, not just results. Track what you felt when the candle formed, what your first impulse was, what made you hesitate or enter. These micro-observations become the raw data your brain will later compress into intuition. 3. Review trades with context. Not just, did I win or lose, but what was the environment? Was I early or late? What did volume say? Context builds depth. 4. Trade live, but small. Backtesting gives structure, but live trading gives sensation. The heartbeat, the hesitation, the heat of the moment. You can't train intuition without experiencing that. 5. Respect your gut, but verify it. Don't confuse fear for insight. Don't confuse excitement for edge. Ask, is this intuition or just emotional noise? Over time, you'll know the difference. Because intuition leaves no tension. It's quiet, it's clear. It feels like alignment, not urgency. And when it's real, you won't need to justify it. You'll just act. Schwager said it best. The best traders are constantly learning, adjusting, and evolving. Their edge grows with them. Intuition is the reward for showing up with full attention every day. It's the prize you get for listening deeply to both the market and yourself. So no, you're not born with it. You build it. Through time, through trial, through the trance of repetition. Intuition is not a gift. It's a scar that speaks. Wizard's Law number 12. The The system fits the trader. You've probably asked the question, what's the best trading strategy? But in Market Wizards, after hundreds of hours interviewing the best in the world, Jack Schwager discovered something shocking. The question is flawed. There is no best system. Because what works for one trader might destroy another. One wizard swears by breakout momentum plays. Another thrives fading the extremes. One uses fundamentals and macro signals. Another has never read a news headline in his life. So what's going on? The system isn't universal. The system is personal, just like athletes train differently based on their body type. Just like musicians gravitate toward instruments that match their spirit, traders evolve systems that fit their psychological makeup. Michael Marcus, for example, could hold through massive drawdowns. That was his temperament. Paul Tudor Jones, he'd cut losers viciously fast, because mentally he had to. Neither is right. They just matched style to psyche. And that's where most traders go wrong. They copy strategies from Twitter. They mimic YouTube setups. They buy indicators they don't understand, and then wonder why it doesn't feel right, why they hesitate, why they self-sabotage, why they violate rules. It's not because the strategy is bad, it's because the strategy doesn't belong to you. Wizards don't look for what works. They look for what feels natural, what they can execute consistently, what aligns with their emotional profile, what fits their schedule, bandwidth, and beliefs about the market. They start with the mirror, not the monitor. So how do you find your system? 1. Audit your nature. Are you patient or impulsive? Do you like control or chaos? Do you prefer simplicity or complexity? Answering these determines your time frame, your indicators, your trade frequency, your risk model. 2. Reverse engineer your best trades. When did you feel most in flow? What setups made sense without forcing? Your past wins hold the blueprint to your natural edge. 3. Notice your resistance. Which trades do you avoid? Which setups make you anxious? That's not just fear, it's incompatibility. 4. Don't force fit a proven system. If it's not yours, it will break under pressure. Even if it should work, if your nervous system rebels, it won't. 5. Adapt slowly. Start with one piece of your strategy. Test it, journal it, refine it. Let your system emerge, don't impose it. Wizards are architects of process. They don't borrow their tools, they forge them. And over time, they stop asking what works. They start asking what works for me, because that's the only edge that lasts. Your system is your second skin. If it doesn't fit, it will tear, right when it matters most. So stop copying. Start listening to your wins, to your breakdowns, to the rhythm of your temperament, because your strategy isn't hiding in someone else's PDF. It's waiting in the pattern of your own behavior. Wizard's Law number 13, react, don't predict. A young trader once asked an old master, "How do you always know where the market will go next?" The master laughed, "I don't." That answer broke the illusion, because the student thought mastery meant predicting the future. But the wizard knew better. The best traders don't predict, they respond. In Market Wizards, this theme echoed again and again. Bruce Kovner said it clearly, "I know where I'm getting out before I get in." That's not prediction, that's preparation. Paul Tudor Jones, he was famous for saying losers average losers, meaning if a trade turns against you, get out. Don't hope, don't guess, react. This is the hard truth. The market doesn't reward profits, it rewards risk managers. Prediction feels powerful. It makes you feel smart, in control, superior. But it's a trap, because prediction requires certainty, and markets are built on uncertainty. When you cling to a prediction, you hesitate to exit, you ignore new data, you hope instead of act, you dig into ego instead of flow. Reaction, on the other hand, is fluid, it's responsive, it's adaptive, it's honest. Let's be clear, this doesn't mean trading blindly. Wizards have systems, they have setups, but their job isn't to be right, it's to stay aligned with what is happening right now. Here's the shift. Instead of asking, where is the market going? Ask, what is the market telling me now? If X happens, what will I do? Where is my invalidation? Wizards build if-then logic into everything. If price breaks above this level with volume, I enter. If it rejects, I step back. If it fakes out, I stop and reassess. No ego, just rules, just flow. Here's how to train that. 1. Ditch the prediction addiction. You're not here to know the future. You're here to respond to the present. 2. Journal your reactions. What did you do when price surprised you? Did you freeze, chase, exit with grace? Patterns live here. 3. Train flexibility. Run scenario drill. What if your bias is wrong? Can you flip without shame? 4. Measure reactivity quality over prediction accuracy. Stop scoring yourself based on whether your forecast was right. Score based on how well you adapted. That's what keeps accounts alive. Because here's the paradox. The more you need to be right, the more likely you are to be wrong. But when you stop needing to predict, you free yourself to pivot, to pause, to strike, to walk away. You stop fighting the market and start dancing with it. And that's where the magic happens. Wizards don't win by seeing the future. They win by staying married to reality. Wizard's Law number 14, drawdown is your teacher. No one likes it. Drawdown. It's the shadow season of trading. Your P&L bleeds red. Your confidence unravels. Your system suddenly feels like a joke. You question everything. Was I ever good? Is the edge gone? Maybe I'm just not cut out for this. But what if drawdown isn't a curse? What if it's a curriculum? In market wizards, almost every top trader had a period of collapse. One lost 70% of his account before discovering risk management. Another spiraled into paralysis, unable to click buy for weeks. One trader walked away from markets completely, then came back, transformed. Because here's the hidden truth. Schwager saw again and again. Drawdown doesn't destroy traders. Ego does. When you resist drawdown, you make it worse. You double down to win it back. You system hop. You overtrade, trying to erase the pain. Or you shut down, afraid to act again. But the wizards, they lean in. They ask, what part of my system broke? What part of me broke? What's the market environment teaching me? What did this stretch expose in my discipline? They treat drawdown like a dojo, a place to train under pressure. Because success in calm markets means little. It's what you do in chaos that defines your trajectory. Here's how wizards survive and grow from it. 1. They normalize it. Drawdown isn't failure. It's math. It's part of the cycle. If you trade, you will experience it. They know it's coming. They build systems that expect it. 2. They reduce risk fast. The moment they feel emotional compression, they scale down, sometimes to almost nothing, not as punishment, as preservation, because clarity returns in stillness. 3. They study obsessively. They journal every trade in drawdown. They watch for patterns, impulsive entries, emotional exits, disconnected context. Drawdown becomes a diagnostic tool. 4. They repair belief before capital. Capital comes back quickly once mindset is stable. But if belief is shattered, no amount of money fixes it. They journal affirmations. They read past notes. They remind themselves, I've been here before. This too is data. 5. They return with humility, not vengeance. They don't win it back. They earn their rhythm again. Step by step, setup by setup. And eventually, something beautiful happens. The pain that almost ended them becomes the foundation of their next breakthrough. Because the deeper the drawdown, the deeper the wisdom waiting inside it. Here's the final truth. You can't avoid drawdown, but you can choose whether it makes you bitter or makes you better. So next time your P&L bleeds, don't panic, don't run, don't numb. Sit with it, study it, let it teach you. Because every wizard was once a trader. On the floor in the red whispering, I will not waste this pain. Wizard's Law number 15, the market rewards survivors. You want the secret? The one thing that separates the traders who last from those who burn out? It's not intelligence, not timing, not even strategy. It's this: they survive. In the final pages of Market Wizards, Jack Schwager reflects on the unspoken law that binds every elite trader. They didn't just make money, they stayed in the game long enough to learn how. Most traders blow up. They over-leverage, they over-believe. They take one bet too far, one all-in moment that ends it all. But wizards, they build longevity into everything they do. They don't need to be right today. They need to still be here tomorrow. Because the real edge is staying alive long enough for your edge to play out. Let's break it down. Survival means cutting losses fast, managing risk like a religion, knowing when not to trade, walking away when emotional, living to fight another day. You see, the market has infinite opportunities, but you only have so much capital, so much emotional energy, so many mistakes you can afford before you quit forever. The greatest traders Schwager interviewed all had horror stories. They lost fortunes, they broke down, they questioned everything, but they didn't vanish. They recalibrated, rebuilt, returned, stronger. They understood this sacred rule. If you protect your downside, the upside takes care of itself. Because trading isn't a one-shot game. It's not one glorious moment of genius. It's 1,000 days of showing up, of adjusting, learning, sitting out, striking. It's boring sometimes, repetitive, lonely, emotionally draining. But if you survive that, you win. So how do you build for survival? 1. Set max drawdown limits. Define your emotional death zone. Walk away before you reach it. 2. Keep risk per trade small. Never let one trade kill your confidence. No single trade should matter that much. 3. Have recovery protocol. When in drawdown, reduce size, trade fewer setups, journal everything, prioritize sleep, nutrition, breath. 4. Detach identity from outcome. You are not your P&L. You are a process runner, a system executor. When you stay neutral, you stay nimble. 5. Love the long game. Stop rushing to make it. Build habits that keep you in the game 10 years from now. That's where mastery lives. Paul Tudor Jones said it best. Don't focus on making money, focus on protecting what you have. Because the best traders don't just win big, they don't die. And that, more than any strategy, signal, or secret, is the final wizard's law. Stay in the game, no matter what. That's how you become legendary. The alchemy of the market wizard. You've made it through the laws. You've walked side by side with the greats. Jones, Kovner, Seykota, Marcus, Schwartz. You've seen their scars, not just their trophies. Felt their doubt, not just their brilliance. Heard their breakdowns whispered between their breakthroughs. So what now? What does it all mean for you? Here's the truth. Schwager never spells out, but every word in Market Wizards points toward. A market wizard is not a person who wins all the time. A market wizard is a person who becomes someone new through the act of trading. Trading is not a skill set, it's an initiation. You enter the arena thinking it's about money, then you realize it's about the mirror. The market doesn't just show you price action, it shows you yourself. Your fear of loss, your need for control, your longing to be right, your addiction to drama, your hidden beliefs about worth, chaos, and success. And slowly, trade by trade, law by law, you don't just become a better trader, you become a clearer thinker, a more disciplined actor, a calmer soul, a sharper observer, a quieter ego. You become someone who can feel fear and still click, feel greed and still wait, feel doubt and still execute, feel pain and still persist. That is alchemy. That is what makes a wizard. Not magical powers, but total responsibility. Not prediction, but precision. Not domination, but deep listening. You'll still lose. You'll still make mistakes. You'll still question yourself on rainy Mondays and losing Fridays. But now, you'll know that's part of the path. Because every wizard at their core carries one belief. I will not waste the pain. I will mine it. I will transmute it. So when you next sit at the screen, when the candles flash, the doubts rise, the finger trembles, whisper to yourself, I'm not just trading the market, I'm trading myself. And if you keep showing up, keep learning, keep honoring your edge, keep respecting the laws, then one day, quietly, without fanfare, you'll look back and realize you didn't become a trader, you became a wizard.